to go over this trade that we took here on the S&P 500 so we can identify what we were looking for on both ends, right? So let's take a look at a bigger picture here on the 10 tick real quick. So instead of a market analysis for today, we're going to go over and review the trade and then go through some psychology, or actually go through the psychology of trading and then review the actual trade that we did, right? So you can see that S&P 500 was in an uptrend, right? Uptrends are defined by higher highs and higher lows, right? You get that push, you get the hold, you get the higher attempt to press and make a new high, but it couldn't. And we started to fail this level over and over and over again, right? So we couldn't get above this resistance. We started to come down, started to touch the VWAP, moving averages started to come overhead, right? And yes, this could have been a potential upside move, right? But what are we looking to identify when we do this is, okay, how far has this market come up? Have we created a lower support? And when we did, or a higher low support, and when we did we press and make a new high? And we didn't. We came back down, created a higher low support, but when we pressed up, we touched the overnight high at 68, where we first found our resistance there. So we found resistance again, and here's your levels here with the volume profile. One area that couldn't break it, and another area that couldn't break these prior levels of resistance in these volume profiles. This is where we're looking for the short opportunity, is right in this area right here. That's where we're looking for the opportunity short, right? And we were looking to target the downside of 40.50, right where you see the market bouncing off of right now on this 10 tick here, which is your close to your overnight low, right around that open area. I'd say a little bit over a point and a half below the open area as well we were targeting. Now, can it come down any lower? Yes, it can. It can probably come down into this area right here, but we're not going to be targeting that whole downside move. You guys see in the video, you're going to see we took 2 lots short. One we took off at 2 points, right? So what that does is it gives us a risk-free trade almost, right? You take it off at 2 points, you move the other one to break even, or a little bit above break even, or below it, however you want to do that, and you capitalize on making money. 2 points on S&P 500 is already $100, and then our next trade we're trying to run out for anywhere from like 7 to 10 points. That's what we're trying to do, right? And 10 points alone on one trade on S&P 500 is $500 by itself, right? One lot. Right now, when you do decide to trade multiple lots and you want to run it for more, that's absolutely fine, right? But you want to put yourself in a position where you're going to have a risk-free trade, so you're less emotionally distracted when you're trading, right? When you take a position off just to break even, right? So if you took 2 positions, each position of mine for the stop is going to be about 2 points. The take profits are going to be, the first one's going to be 2 points, right? So I can at least have a risk-free trade on my next lot that I'm going to run. The second one can be anywhere from 4 to 6 to 8 to 10 points, whatever you want. I just took my target for my take profit off because we saw so much space coming in right in this area right here, right? So we highlighted the areas that we were looking at, is what there was an impulse to create that high, and we push it, right? And we couldn't get above it. We came all the way back up to a previous peak and we couldn't get above that. And we started to break to the downside right around this area. And that's where we started to notice, okay, this is your slight head and shoulders pattern for a push down. And we did break 2 levels of resistance, which is one of my rules that I have, right? So we did see some movement down into this area right here, which is our prior impulse point, right? And so we wanted to see how we could target that as best as possible and take the most out of that in a span of maybe, I don't know, 15-20 minutes at max, right? So you made about about $500 in about 20 minutes. That's not bad for a trading day, right? That pretty much could be your whole day if you want to. But you know, I trade usually about 6 trades within each session: US session, Asian session, which is this one, and the London session. In this case, there's really no need to trade the other 6. We traded 2 so far, and we've made about 500, and I have 4 trades left in the session if I really want to trade it. But we also made more money on the US session, so we still have the London session to go. So you know, we might just hold back. If I see any opportunity present itself, maybe a long opportunity here for a fade back up, then yeah, I'll look to try to take that type of trade. But as of right now, there's really no need to try to take any other trades unless I see something really pointing itself out or pushing, right? But just wanted to show you guys that trade that we were doing on S&P and go through the psychology of what was taking place. When we leave those ellipses on and we come over to the 4 tick, I could show you guys a little bit more clearly what was going on. So you get this upside move here, right? Higher low push, boom boom boom, and we finally break through the trend line. Cannot get back above the resistances up above, and that becomes our level of interest, right? So when we come down, we break 2 levels of resistance, 1 2 or support, 1 2 here, and we come back up to touch a prior peak. When we touch that prior peak, we hold the resistance and we find ourselves collapsing even lower from there, right? So that was one of the greater opportunities we had to take a good trade, a really easy trade to the downside. And we weren't really worrying. We got exactly where we wanted to see, and we knew this thing was going to come down. How far it was going to come down, not too sure. I didn't know for sure if it was going to come all the way to the 40s. I was somewhat targeting the top of the peak over here as my level of interest to exit that point, right? But I didn't expect it to come all the way to the 40, 50, which is the level we had. When you look at the video, you can see that level we actually had, right? But just want to touch up a little bit too on trading psychology when you're in the trade, right? How do you not self-sabotage yourself, right? How do you get away from all the negative thoughts that's going on? Well, the best possible way is to trade multiple lots and take off profit early and let the other one try to run for a little bit more. That alleviates you from stressing out for the trade to come back and take you out, or you lose 10, 20, 30, 40 points or whatever because you wanted to try to hold on to the trade as hopeful trading versus actually learning and seeing the markets correctly and the communication of the market, right? In this case, this is not hopeful trading. This was clear technical analysis, fundamental process driven trading, and that's what you want to be able to do, is find your process in trading. And when you got that rules-based process, follow it. You're not always going to have winning days, but you are going to have more days that you're going to win than you are going to lose, right? Or you can have days where you come back from losses because you know exactly what you're looking out for, right? So again, thank you all for watching this video. Hope you guys enjoy it. I'll probably maybe come out with more trading videos with psychology behind it, but this is just a sneak peek of what we're trying to transition into. Market analysis for London sessions will still come out to give you guys some ideas to trade these levels, but we didn't do too much because the volatility was too high, meaning that by the time we came into the London session, the levels were already hit and broken through, or broken above or below, and there wasn't really much that we could trade from there. So now that the volatility is somewhat slowing down, you still have some decent movement. It will be good to kind of get back in here to do market analysis videos for you guys, but want to also touch up on the psychology behind trading for those traders that seem to be struggling with, how do I stay in a trade? How do I get comfortable with my strategy that I have? How do I build confidence in my ability to trade levels? How far do I need my stops to be, right? More volatility, I would say, then there's reason for you to slightly widen the stop. Not ridiculously, like 5-10 points, but maybe about 2 points per lot that you have to widen that stop. Anything more than 2 points, you might be risking it just a little bit. But if you have the account to afford it, then by all means, if that's what you think you're comfortable with, then go for it. But if you don't have that account, if you're not comfortable with that, I would say at maximum should be 2 points. At minimum, it probably should be maybe about 5-6 ticks. If if you're gonna do it that way, you gotta have the best entries possible, right? And with trading, it's hard to be patient and disciplined to have that best high probability trade because you're looking to wait for a longer period of time, right? So but again, thank you guys for watching. If you did like this video, go ahead and hit that like button. If you are not subscribed yet, please go ahead and subscribe to the channel. If you guys have any questions, feel free to contact us here at TRADEPRO Academy, or you can contact me here on YouTube, write a message, and then I'll get back to you. Guys, take care.